This is the Self-Storage Podcast, where we share the knowledge and skills from the industry's leading investors, developers, and operators to help you launch and grow your self-storage business. I'm your host, Scott Meyers, and over the past 16 years, we have acquired, developed, converted, and syndicated over 2 million square feet of self-storage nationwide with the help of my incredible team at selfstorageinvesting.com, who has helped thousands of people achieve greatness in self-storage. Hello, everyone, and welcome back to the Self-Storage Podcast. I'm your host, Scott Meyers, and this week's podcast is another in our Platform for Change segments. And simply put, these segments came together by collaborating with my team members who were able to educate me on understanding the lens of the Black community in their everyday experience. Our own business that has grown through education, understanding, and partnership with a diverse array of wonderful individuals and these podcast segments, it would be a way for us to continue the conversations as our way of saying the lens and understanding need to become a shared experience in order to be the change we want to see. So my guest today is my friend, Donnell Stidhum, who is an engineer and an educator who has been a real estate investor for over 20 years in single-family, multifamily, commercial, and industrial properties. And his goal is to assist his clients and investors in their quest for financial freedom and creating generational wealth through one-on-one consultation and an abundance of online tools. And for the past 5 years, he has been a private pension plan consultant with self-directed retirement plans, working directly with his partner, Rick Pendykoski. Now, through the years, he has traveled across the United States, speaking to tens of thousands of people at real estate investor associations and conferences and in general investment groups, and has personally supported thousands of clients with self-storage directing their retirement accounts. And as a result, they have achieved true investing freedom to invest in what they want, when they want, with 100% checkbook control. So, Donnell, I'm sorry. I'm not sorry to see you. Don't take that the wrong way, but I'm sorry that we're not here in person like we normally are at our live events, but it is good to see you again. So if you would, catch us up to speed on what you've been doing, fill in the gaps that I left out of the bio, and share with the folks some really cool things you're seeing in the marketplace now.
Not a problem. So I think in short, I'm really just a husband, a father, a mentor, and a leader. And I think in my own personal growth, it has forced me to kind of step outside of my traditional business structure and normal process of doing things, and focus on some opportunities out there that to build wealth and grow income. Mm-hmm. And in the process, in my journey to try to understand my own challenges and work through some of my own challenges, what I identified was there's a gap. There's a gap in education out there as it relates to just money in general, but more specifically, retirement accounts and how they can or cannot be used to invest with, how you can or cannot take control of them. And I wouldn't necessarily call it luck. It was probably more divine intervention. But I was introduced to a gentleman by the name of Rick Pendykoski, who introduced me to self-directed retirement accounts. And in the midst of that introduction, what dawned on me was there's a lot of people like me. There's a lot of people that look like me who are missing this information. And so I wanted to get educated very quickly. Mm-hmm. And so at that point, I focused on being able to not just absorb information for my own use, be able to package it such that I could give it away, so that I could share it and help others understand how to use retirement dollars to be able to invest in what you want, when you want. And that's really kind of what took me on this trajectory of both education and also success. As far as kind of what's happening right now as it relates to this pandemic, I've learned a few things about myself. I learned that I feed off of the energy of others. So this has been a challenging period for me and a growth period for me to try to understand how to get the same message of educating and helping people understand how to take full advantage of the opportunities in front of them, but doing so virtually. To the point where, as of today, it's interesting, we are launching today my YouTube channel. And it's self-directed investment strategies YouTube channel that focuses on just that. What is an IRA? What is a 401k? What can it be used for? How can it be used to invest in real estate? What are the different types of real estate? What are the different opportunities out there? And it's really me acknowledging that I'm kind of stepping into my purpose. If you were to look at my my occupational history, it's been filled with manufacturing, big box distributors, even healthcare. And I've led a lot of diverse teams, and I made a lot of companies a lot of money. But what I'm realizing is I didn't do that because I'm a great engineer or even a great leader. What it is I love information. I love to share that information. So I love growing. I love learning, and I love sharing that knowledge. And so what dawned on me is I can use this vehicle to do what I love to do, and that is share information, give information away, help people get to these different plateaus in their life by just providing them with content, valuable content. And so today I am launching my YouTube channel to do that. So I'm excited about that. But in addition, as it relates to the market, there's a lot of misinformation out there. There's a lot of misinformation related to the CARES Act. There's a lot of misinformation related to what you can or can't do within this pandemic. And so my main focus has been trying to decipher or decode some of this information that's out here, package it up nicely, and give it away. Mm-hmm. And what I've been asking clients of mine or people who sit down for consultation is just to come with questions, come with needs, and then let's work through those details and achieve a better tomorrow.
Well, congratulations on the YouTube channel. First of all, that's pretty exciting.
And it's funny, we literally launched this morning.
Oh, that's fantastic. Well, we will continue to promote that. And by nature of you being on here, some folks are going to be heading your way after this as well. And I had to chuckle when you said that one of the main purposes is to combat some of the misinformation out there regarding checkbook control of your money and self-directed IRAs, because I find myself being the kind of watchdog or the policeman of bad self-storage investing information that I see out there in the different forums and different places. And, I watch these things because I'm in self-storage. And so the stuff just naturally, that follows me. And I read through some of this stuff and I'm like, oh my gosh, from somebody who's either never been in self-storage or done one deal, and giving out some bad information, as well as in some cases, some illegal information, especially when it comes to syndication and private equity and using these self-directed accounts in the wrong way in the eyes of the SEC. So I am thankful that you've taken that approach of keeping people out of trouble, and then also just kind of breaking that down. I mean, that's the fun thing, and it's a fun part of what we do as educators, is to be able to help people sometimes just get over the hump with encouragement, give them the right information, but then also keep them from making a bad mistake, because there's a lot of free information out there, but that free information isn't the best way to build a business and to go out and begin investing in any vehicle.
Right. Absolutely right. What's scary is one of the people that I find myself challenging more often than not is Dave Ramsey. And it's so weird because he has such a large following, but I shake my head and go, no, that's incorrect, and kind of walk down that path. It's pretty funny.
Yeah, there is, you can look, there's different, from Kiyosaki to Ramsey, and those two don't see eye to eye, as well as all the other folks out there that are talking about ways to do things. And some of it is opinion, and others, as you mentioned, is just like, well, it doesn't really work that way. But realize they're catering to their audience, and some of the information they give out, I think that they may not even follow or agree with 100%. And I don't mean that they're lying or being hypocritical. It's just that here's their following, and they are the shepherds, and they understand that if they give their sheep some information that may be too much for them, they may go walking off a cliff. And so they have to kind of protect the flock, and they have to play it safe, even if it isn't the best way to create wealth or income and ways of doing things. But I digress. Let's chat about what you're seeing in the marketplace right now. And, I guess one of the questions that I wanted to ask you is, as we send clients your way to set up self-directed accounts so that they can invest in self-storage investments, and hopefully ours, but whatever, other self-storage investments or other syndications, there's a whole lot of, since March, since the beginning of COVID, there's a whole lot of questions about, okay, I've got this money that now I've been let go, and I've got this 401k that is now available to me, or a Roth that I can convert. So let's convert it to become self-directed. Now, what do I do with it? So, and I know that you're not in the business of financial advising, that's beyond what you do, but how do you answer that? And what are you seeing surrounding these folks that don't have that clarity, and where are you pointing them right now?
I'd say there's probably three categories. The first is the active investor who full-blown sees this as an opportunity. they know full well that they've never been able to access this money in the past without penalty and tax. And because of the CARES Act, hey, there's an opportunity to be able to touch these funds. I just need to know how. I already have an idea. I already know the path that I want to go down. I just need the pathway to get to it and get to it quickly. And then you have those who aren't necessarily affected by the pandemic, but they understand that in order for them to get beyond this space that they're in, they need to be able to make, I guess, grow their retirement faster. They're realizing that, hey, I've hit this age that, you know what, when I look at the dollar amount in my retirement, it's not what I was expecting it to be. And if I do the math, there's no way I'll be at a point where I can actually stop working today. So I need to do something different. And I'm really unsure as to what that looks like. And you know, there's a lot of charlatans out there that are selling me false promises. I'm really hesitant to kind of step into and take control of these dollars. Oh, and I've also been taught that I can't. So there's a grassroots educational base that we have to kind of start on, build a brand new foundation around. Here's what these funds look like. Here's how they're accessible. Here's what makes it legal and some of the rules behind it. And then there's this other group who they have been fully hit by this pandemic. And, you know, they're not looking for handouts, but here's an opportunity to be able to pull themselves out of this pandemic by their own bootstraps, but they're unclear as to how to go about it. You know, they may have, you know, dabbled in touching some of their retirement dollars before, but they were hit with penalties and hit with tax, or, you know, they were paying these fees that they didn't really understand. So again, it starts with education, but those individuals are doing less investing in, I'll call it non-traditional investments like self-storage, but they're doing more, hey, I need to acquire this lump sum so I can help get through this pandemic. So the first two individuals, I'd say the majority of the calls are the first two individuals. And what I am seeing is a lot of my active investors are looking for passive returns. So they're looking to be hard money investors with this, with their retirement dollars versus putting it, you know, versus the traditional active investor who, hey, I want to go tackle this fix and flip across the street. They're looking to grow these funds and in more of a passive fashion is what I'm seeing. I will say there's a bit more hesitancy than I've seen in the past. And I think that's largely due to this pandemic and the impact that it's just had on society in general. Things are a lot slower. I'd say the good part for me on that is it does allow me to spend more time educating. So I do find myself talking more than I used to. It used to be, you know, I'd lay down the foundation and go, okay, yep, I'm ready to go. Where do I sign? Because I need access to these funds so I can take off and take advantage of this opportunity. I do find myself getting 2, 3 reoccurring calls going, hey, you said this, but if I wanted to partner with Scott Meyers, how does that look compared to wanting to buy a traditional single family home? Like, what are the challenges there? Are there any rules that I need to be aware of? So I am seeing a lot of that.
And, you know, it's a good thing. It can be frustrating for those of us that are, you know, wanting those partners to come along, obviously, and to do it in a quicker fashion. But you all almost have to be careful what you wish for, because in the past, we have a whole lot of folks that come alongside of us. And I'm thankful that they're very trusting, and, you know, perhaps they've had a relationship with us for a long time, but other folks, you know, maybe shorter, and they haven't done their due diligence. You know, they watch a webinar, one of our offerings, they do a little bit of research, pull down the documents and write a check or wire the money in. And again, that's great. Don't get me wrong, but, you know, we want to invest with folks that are going to do some due diligence as well, because we don't want them to have surprises down the road. And it just shows us that they're going to be savvy partners going forward. So I appreciate that. You know, when we do meet those folks that are doing a little more of that due diligence and asking the what if questions and going down that path and looking at advisors. Right. So what, and again, I know you're not here to advise us or anybody listening to this, nor your folks, but what are you seeing in the landscape right now, or say for the balance of 2020? What opportunities do you see out there in the marketplace, or some moves that people need to be making from an investing standpoint, whether it's retirement funds or anything that has been moved into, or just putting some money back into play? Where do you see some places in the market where there's been a vast amount of opportunity recently?
So what's interesting is, well, let me speak specifically to the area that I'm in, and that's Arizona. There was a large anticipation of some type of real estate or bubble that was going to burst. And what's happening is we're not seeing that. And so what's happening is that most of the money is going out to the smaller markets to be able to invest in, short-term fix and flips. But in addition, what's happening here is, I want to say there's probably 4 different new build self-storage facilities going up. I have been getting a lot of calls recently around wanting to partner um, on those new builds, both within Arizona and outside. So as far as what the opportunities are, I think it's varying from state to state. There's markets that were assumed to be headed in one direction, and we're just not seeing that. But I think the majority of pullback that I'm seeing is from commercial real. There's not as much commercial real estate activity going on within the people that I'm working with and their retirement dollars. It's been a lot of residential, a few apartment complexes, and self-storage. But as far as I want to say, last year there was a large push around strip malls. There was a large amount of investing going on in strip malls. But with this COVID thing and the way it's shut down brick and mortar opportunities, that's been the biggest drawback that I've seen. So as far as trajectory going forward, I can see a lot of pullback from that side of things and focus more on residential, if not, in your space.
Well, and again, people are doing a little more due diligence, and so our fundraising abilities and the time frame, the runway, it seems to be lengthened just a little bit. We have a lot of interest in our projects and our webinars. A lot of folks attending those, a lot of folks pulling down information from our portals, but there seems to be just a little more due diligence going on and less action. Yeah.
Right.
But and it's interesting that you state, and again, we don't have this figured out. I'm talking to syndicators and folks in self-directed funds like yourself on a regular basis, and have been for weeks now, just to see, hey, how do we just shore that gap? And it's just a little bit to get that the activity level where we were before. And you mentioned something that I picked up on. I don't know if this is again theory or not, and that is on the commercial side. If you look at any of the charts or graphs as to areas of the economy that have been affected, if you look at commercial real estate, well, they've all been affected quite a bit. And if you look at lodging, meaning hotels, if you look at gaming, if you look at assisted living, if you look at medical facilities, and obviously retail, all of those, because of, lockdowns and shelter in place, they've been decimated.
Right.
And so the overall returns, if you look at the commercial landscape right now, that may take everybody, to just kind of take a step back and say, whoa, commercial real estate is not the place to be, because look how far it's gone down. Well, yeah, those are the part of the economy that has probably got hit the hardest. We know self-storage is, we can rent units without being in contact with any person, and it is an essential business. So that's a little bit different. Data centers, cell towers, those are all still going strong, and multifamily is still done fairly decently up to this point. So, that's a good point that you bring there. And then combine that with the fact that I believe that people may not be willing to put their money in for too long. A commercial project is going to be, a turnaround is 2-3 years. And if it's a development project, 5 years or more. Whereas if they put money into plain real estate and a fix and flip, how much worse can it get, or how much of a change can we see in 30, 60, 90 days when this person, refinances or sells and brings their money back? So is that a fair assessment?
Absolutely. That's spot on. Spot on.
Yeah. Well, so let's talk about we got a whole lot of things going on in our economy right now, and unsettling. Pandemic. We have a recession. Whether you believe we're in it or going to be in it, either way, we've got social unrest. We've got racial issues all across the country right now, and then throw in an election on top of that, and there's a whole lot of lack of clarity. So, when we get beyond this, probably the biggest piece to this is the election. We know that, at least in real estate and some of the bigger investments that your folks are making, hit the pause button until after the election.
Right. Want to see what happens.
Yeah. What are you seeing, and what have you seen in the past, Donnell, and what does that look like for folks that are, should they be waiting right now? Is now the time with interest rates low, and do you take the chance of waiting to see if they go up? What does that look like post-election heading into 2021?
And so what I'm seeing from my savvy investors, and those are the ones that are more, I'll call it, they're willing to take more risk. There is no holds barred there, because the opportunities are out there, and because people are skeptical or hesitant, my savvy investors are going after things in a gangbuster fashion. Should people be a bit more hesitant? I kind of liken it to what I kind of mentioned earlier, and that is, it's that foundation of education. Rather than do nothing, I would say focus your attention on understanding. Because what you might find is, regardless of what happens with the election, you can't pass up a double-digit return opportunity if it runs across. The key is to be prepared. But if you haven't done your due diligence and gotten the proper education, spent the necessary time with you or spent the necessary time with me to understand how these funds can be used and put them in the right proper position so that when that opportunity comes about, you'll be able to take advantage, what's going to happen is you're going to be left behind. Whether whether things happen the way you're expecting them to after the election or not, the key is to become properly structured and prepared so that you can take action when the time is right. And this election may or may not have any bearing on that. And what I'm seeing from my more savvy, seasoned investors is they're not waiting. California, people are leaving California in droves. Mm-hmm. And what that's doing is that's driving a lot of value in a lot of other close major cities, Phoenix being one of them. Mm-hmm. And now is the time, because this is a seller's market. So that's kind of I'd say my take on in the short term. Mm-hmm. It's education, becoming prepared so that you can take advantage when the opportunity presents itself, versus waiting in all intents purposes, doing nothing until after you see what happens with this election.
And I would share that sentiment as well. And that is, we've been pretty bold in beating the drum in our mastermind and at our other events that we're still holding online with folks. And that is, we kind of have this perfect storm. We've got lowest interest rates we've ever seen. Right. We have, as you mentioned, a seller's market. There's a whole bunch of folks that if they've been, hanging on, they're now ready to sell their facilities. They don't want to go through a pandemic or recession or, face any more competition. And so, they are selling. We've got development, which is slowed, because that's what happens during a recession, is those development dollars and those speculative projects get put on hold. And all the while, we have all these factors that are leading to an increase in demand for self-storage. We got folks that came home from college early and they may be doing that again. We have folks that are forced to go work from home and they have to clean out a bedroom or a living room or family room, put their stuff in storage so that they and perhaps their spouse can find a place to work and homeschool the kids at the same time. Right. And then we have businesses that are closing down. They're putting inventory into storage, and others that as we head into the recession a little bit deeper, where people will be downsizing, they'll be forced to, and we may see some foreclosures and people moving in with each other, moving back home. So all of these, lead up to yet again, a perfect storm for self-storage. And I've said this before, and I'll say it again. We don't celebrate a pandemic and we don't celebrate a recession, but I'm thankful we're in this space that is very recession resistant and actually thrives during a recession. So that's the take that we have. And I can't say that I've ever been one. I may be a little too overly optimistic when it comes to, our bravado when it comes to investing, but we're in that camp. And I appreciate you saying savvy, and certainly we believe that that's correct. And that, there are not enough hours in the day, and we're scaling up and we're adding more staff, and we're going to go out and make that land grab right now while we see this huge opportunity.
And I would say to the audience, if you're on that fence, the key action here is to become prepared.
Mm-hmm.
So that should I or shouldn't I approach? It's really more of a let me prepare for whatever the opportunity brings.
Correct.
So that way you can take action, because otherwise they'll be left behind.
Yeah. And I can speak to that firsthand, Donnell, as you and I both know, because probably the first question is when somebody's ready to invest with us or in another project, they say, all right, Donnell, how fast can you get my account set up?
Exactly.
Because I need to have my money wired in by tomorrow. And it's like, well, it doesn't quite work that way. So,
Right.
luck is where opportunity meets preparation. And especially in this world and in your world, yes, it's time to set up that account now, because when that opportunity presents itself, sometimes it can't wait for 2 to 3 weeks or maybe longer
Right.
for their old custodian to release those funds into an account that you can set up with them. So I agree 100%.
That's right.
So let's talk as we wrap up here. So we've been doing these segments, being a platform for change and really facing a diversity and taking a look internally in our own business and how we conduct ourselves, and as well as out there in the landscape. And as I've said on these segments before, I thought I knew and I thought I understood, and I'm finding out very quickly that I don't, and very little. And we had a gentleman on, I think Alex Braun, who was on a recent episode, and he was mentioning, he said, when I first got into self-storage, he said, this was the white man's club, and we used to go to the Self-Storage Association, and I thought about that for a moment. That's 15 years ago, the time that I got in, and I have to say, I think he's right. And when you begin to then really look back and you realize, there are certain businesses, segments, or events, however you want to look at it, and it does not reflect diversity by any stretch within some of these areas. And so not pointing fingers or stating anything about any industry or, the SSA or the self-storage industry, but, that's one of those areas where my eyes have been opened. So, if you could, share a little bit about what you've seen in your industry and how that may have affected you, or some of the challenges, perhaps, if you've experienced any, as you've gotten to the place where you are in your career now.
Yeah. So, I have been thinking a lot so I watched several of your previous podcasts on this subject, and I don't know that my story's much different, but I think my perspective is a little bit, and here's what I mean by that. Throughout my life, I'd say from second grade through college, I may have had one teacher that looked or resembled me. So representation has always been a challenge. I've always been, in environments where, there's a very few people of color within that environment. Every role that I've played in leadership with the different major companies, Ford Motor Company, Amazon, big, large Target, very large companies in leadership positions, there hasn't been a lot of representation. So now when you step into the non-traditional investment arena, when you look at the cash flow quadrant, what are we talking about? In the non-traditional investment arena, you're talking about entrepreneurs and business owners for the most part. Well, when you think of entrepreneurship and business owners, 9 times out of 10, when I'm talking to a group of people around self-directing retirement accounts, I am talking to non-people of color. So I had to really think about, systemic racism. Like, what does that mean? And how have I been impacted in the industry that I'm in? I spent a fair amount of time just trying to think through how I have been impacted. And what I've come to realize is it's a evolution of growth. It's I'm going to call it perseverance and personal development. And what I mean by that is, I would say as a young man, I was looking at my son. He'll be 20 in the next 3 days. At the age that I was, that my son is now, I realized my approach and my thought process around leadership and leadership of others, and walking into an environment of people that didn't look like me. My approach was this: I am walking into an environment where I expect to be underestimated and to be received negatively. And it's going to be my responsibility to kind of turn those tables. And so ultimately what I'm doing is I'm preparing myself for what may come. Now, it may never come. I may never be impacted by what it is I'm anticipating, but I have to prepare myself, because the last thing I want to do is to be caught off guard by what you might consider racist or off color comments or whatever the case may be. So I have to prepare myself. Well, throughout the years, that became quite a heavy burden to carry, because it's almost like I'm always on guard. Well, my evolution over time through personal development has been that I'm expecting to walk into a situation that may not turn out the way that I want, into I'm hopeful. I'm hopeful that when you see me as an equal. And then I approach it from that perspective. But that has even evolved to, based off the subject matter in which I'm focused on today, and how I spend time educating all and focusing on how to grow wealth and be able to sustain your family over time. It's really more about class than it is about race. And so my message is a message for all. And so it's less about, when I was a young man, walking into an environment where I'm expecting it to be a certain way, evolving into I'm hoping that it won't be a certain way, to I expect in the environment that I'm working in that we are on the same playing field. We're on the same plane. Now, if things don't turn out that way, and I may have to deal with some of that negativity or racist response that I may receive from time to time, because I'm dealing with old money. I'm prepared, but I'm not walking into a situation with my guard up. So it's much more. I'd say it's less wear and tear on my body. It's less of a burden to carry. What I realized though, and this is me watching my kids, what I've realized though is my son, and I've got 4 boys. All of my boys have grown up in an environment where they didn't have to, I'll say, develop that callous approach to the world and fix that over time. They've never dealt with some of the things that I've dealt with, which is why you're seeing some of the activity that you're seeing as it relates to, we are not going to stand for this. It is absolutely my kids' generation that are saying, this is not how you treat people. I shouldn't have to be okay with some of the actions that I'm being presented with, and we are going to do something about it. So it's a very different time. And I'd say for myself personally, it's been a fair amount of growth and time spent on why I'm approaching something a certain way. I hope that I'm being specific, but then again, I'm not. So hopefully you follow what I'm referencing there as it relates to my growth over time.
I am, and that's perfectly clear. And yet again, unfortunate that you've had to go into those situations and understanding that, and I understand that better now. But the lesson out of that is the approach that you've taken, which is perseverance and personal development.
Right.
And I'm not going to pretend that I can understand that on any level the same as you have, except for the fact that when I walk into a room with that old money, I feel like I'm the dumbest person in the room, and that I have to persevere through that. And out of my own personal development, I have to get better and better at my craft so that I'm not in that position. So if anything, I think that's a lesson for anyone, but building up the confidence muscle just to realize
Right.
that any situation that you walk into, you need to be prepared, and that
right.
comes from always learning and being better and being the best version of you that you can possibly be. So what would you add to that, Donnell? Tell us a little bit more about. I mean, you've obviously risen to an incredible level. Love Rick Pendykoski, but I got to tell you, I love seeing your face walk into our doors. And we miss Rick from time to time, and it's certainly no substitute in the job that you do for our folks. You're on it, and so we appreciate that when you come to our events, as well as the care that you've taken for our folks and with our folks as well. But
Right.
let's talk about next steps. What does that look like for you, and how do you navigate through this this next season that we're going through?
Yeah, and I think so like I mentioned before, I learned something about myself, that I feed off the energy of others.
Mm-hmm.
Well, I am not in a position to be able to get out in front the way that I used to. So, but how do I get that message out?
Mhm.
How do I get this information that, again, I really do believe what I'm stepping into is my purpose. I spent 40 years in manufacturing environments, leading, doing everything I can to not be a teacher. But the truth is, I think at my core,
Mhm.
I've always enjoyed sharing information and educating. And so my objective now is to fully step into that purpose and be a change agent, be a vessel to help close gaps knowledge-wise for people who need information. So how do you do that? I have to be a face in the place. And that's kind of what prompted, and it's really my wife, that's kind of what prompted the YouTube channel.
Mhm.
That's what prompted the webinar. I created a webinar, and it's a generic webinar that demystifies the CARES Act and how you're able to take advantage of it
Mhm.
using your retirement dollars. There was just a lot. If you type CARES Act in YouTube or CARES Act in Google, there's just a lot of information that's quite
Mhm.
confusing. So
Mhm.
my objective was for people in this space, here's how you break this down. And I wanted to put it in terms that whether you are a savvy investor or you're an individual who really they have a retirement account but didn't understand that they were able to access it, I wanted to make sure that it fit the full spectrum.
Mhm.
And so that's kind of been my objective, is to just get face to face in front of someone's camera and get the message out, and I'll call it specific in the message in which I'm trying to
Mhm.
communicate. And
Mhm.
so this YouTube channel for me, it's going to be focused around um, the different products that we offer: self-directed IRAs, 401ks, leverage
Mhm.
using a non-recourse loan, ROBs, all of those things. But in addition, I'm focusing on, I've been calling it linear versus exponential growth. And it's really more a
Mhm.
mindset.
Mhm.
We have been programmed to do things a certain way. And my thought process is I want to challenge some of that conventional wisdom. A perfect example is a mortgage versus a first position home equity line of credit.
Mhm.
We have been taught that the best way to finance your home is to rely on a bank and a lender and get you a mortgage, and you be stuck in it for 30 years and you end up paying double for that home.
Mhm.
But if you take that same interest rate, and I know first position home equity line of credit might be a little bit higher, but if you do the math, the amount of interest saved is astronomical. But if you don't break that down fully and really help people understand why they have been sold one product because it's lucrative for banks and they make a lot of money,
Mhm.
and then educate them on why the other product makes sense,
Mhm.
you'll miss a lot of people. So
Mhm.
my goal is to bridge that gap, is to
Mhm.
provide that education. And that has nothing to do with self-directed retirement accounts.
Mhm.
It
Mhm.
has to do with money. It has to do with our relationship with money, our relationship with credit, our relationship with all of these things that we don't know what we don't know, and we've been conditioned to believe a certain thing. And my objective is to challenge that. And the way I'm going to do that is through mediums like this.
Mhm. Well, Donnell, 40 years is certainly a magic number and a biblical number. So you spent 40 years in the desert, and now to get out there and to begin teaching people, and you're made for this, whether you believe it or not. The way that you command a group when you walk into our room of folks, and the way that you have them hanging on your every word, and opening up a new world to them that in most cases they've never been aware of or knew that was available to them. That is your gift. So thank you for
Appreciate that.
taking the call on, and as well as the YouTube channel. So give your wife kudos from me as well. And I thank her for getting your word out, because there's nothing better than changing people's lives. Not only is it incredible for them, but it's a little bit gratifying for us as well. If we can turn on a light bulb and then, send somebody on down the path that they never knew was
Right.
available to them. And so I'm also thankful that you've dug in and begun to take on this mission as well, because we also are selfishly are benefactors of that. And that's a session that you now teach at our academy is, a little bit on the self-directed IRA part by condensing that, but really, as we focus on the CARES Act and what that means within that same realm, teaching those folks. So, gang, if you want to hear more from Donnell as it pertains to how to utilize the benefits of the CARES Act as it pertains to self-storage, then, go seek out the Self-Storage Academy and get signed up. Beyond that, then you need to go and check out Donnell's YouTube channel. And then also, what is the best way that you want to leave either website, Twitter, email? How can people get in touch with you to learn more about what you're doing and from you in terms of what you're doing?
So I personally, and I know I won't be able to sustain this, but I personally enjoy that dialogue. So I tend to start with a conversation over the phone.
Mm-hmm.
And it's just, to me, it allows you to break down barriers and get to the meat. And then we can email and video chat or whatever from there, because then we can provide more detail. But that one-on-one consultation is kind of what I thrive for. So the best way to reach me is really call me, give me a call, 816-916-0039. But outside of that, I've got my YouTube channel that is finally on board at Self-Directed Strategies, Self-Directed Investment Strategies. And you can also jump into my class, which is a 30-minute free webinar, which I will be presenting for you later on today. But you can access that through selfdirected.info, www.selfdirected.info. And that's pretty much how you reach me.
Fantastic. Well, appreciate that, Donnell. And this is a very popular podcast. And so don't be surprised if the phone starts ringing when this airs.
Not a problem.
All right, Donnell, any, how about parting words of wisdom that has maybe served you over the years, or anything that you've heard recently that you can leave with everyone as we wrap up for today?
I don't know that it's that profound. But I will speak to the investor in this audience. The best thing you can do right now is to get yourself properly structured. And that actually means something different for everyone. Maybe properly structured for you simply means education. Maybe for others, it means not just education, but I need to move funds over and have them transferred into a self-directed vehicle, whether it's a self-directed IRA or 401k, so that I'm prepared. But the bottom line is becoming properly structured, because that is the only way we're going to make it through this pandemic and into next year. Because I don't think we've seen all of the changes that are coming, but the key is to become properly structured and properly prepared. So not necessarily a quote or anything, but I have been ending all of my conversations with, regardless of whether you work with me or not, the key for you is education and becoming properly structured.
Nope, can't be said enough and can't be said too many times. Absolutely, you need to build that foundation, and that begins with the structure. It's not sexy because everybody wants to talk about, hey, let's jump ahead 3 steps and how do I make the money? And say, well, hold on a second. It doesn't quite work that way. So I appreciate that, and we'll continue to beat that drum as well. Well, Donnell, I'm so glad that we were able to catch up here via Zoom, and by video. It's, again, not the same, but this is the way we do it right now. And having a more frequent touch points and holding more academies and seeing you and having you teach our folks has been fantastic. So, again, thank you so much for your time. Thank you for your message and the way that you care for and take care of our folks, as well as now all these folks that I get a chance to meet you for the first time by way of our podcast. So thank you for your time, my friend.
Not a problem. And, kudos to you for creating this platform to not just review opportunities within the space, but also to talk about social change. So I think kudos to you for that.
Yeah, well, my pleasure. You can thank our staff for that. And so I'm just carrying on, and we're all doing our part. And so I appreciate that. Well, Donnell, enjoy the rest of your day. And yeah, we'll see you in just a little bit.
Absolutely.
Thanks again.
Have a good one.
Take care.
Thank you.
Ladies and gentlemen, thank you for listening as always. Now, we're going to be talking about topics like this that are on target for the times that we find ourselves in. So it is important that you are listening to this podcast every single week, because the guests that I'm going to be bringing on and the topics we will be covering are relevant to what we are all going through right now. And it's just going to get better and better and better in terms of the content that we're going to be discussing, and it's going to be more timely than ever. So please, Make sure you subscribe to the show and make sure you're paying attention to these episodes as they are coming out during this period, as I am specifically going out and finding guests who are providing really valuable information you need right now. So thank you so much. We'll see you next week.